Hi, and welcome to another weekly recap. So, today I'm going to recap week 18, and it's from June 30 to July 4. So, let's start with GU and let's progress to XAU. So, in GU this week, I was absent on July 1 due to personal reasons, but apart from that, I was present on all 4 days. I didn't have any missed trades on this week, but unfortunately, I took one trade and it ended up as a losing trade. There are some adjustments that I need to make in terms of confirmation entry that we will discuss when discussing about this losing trade. Um, yeah, that's it. That's the overview of what happened on GU this week. And also, this loser is a complete loser. The price tagged me in and just immediately tagged me out. So the price did not even move in my direction for a while. It just tagged in and tag out trade. So I was not able to trail the stop loss. So let's jump into the charts and see what happened on this week. As I told you, I was absent on July 1. So I just posted you what would have been the scenario on this day. Anyway, let's start with June 30. So I'll discuss in brief what happened in the daily chart because in the daily remains in the same area of value for most of the time. If there is any major change, definitely I would discuss that. If not, I'll just skip this one. Cool. So in the daily chart, the swing structure is bullish. You can see that the swing structure is bullish. We are having a clear swing structure, and this is the demand that is holding the price currently. And this demand has swept some sell side liquidity, and it has pushed up rapidly. And also, price reached the discount prices. So we can say that this is a valid demand zone. This is a valid push up. But yeah, the price can also come down to mitigate this demand zone and then continue pushing up. This would be a fake uh, bearish boss in the daily, but let's not focus on that one. For now, what we know is price had made a boss bullish, so now we can expect some swing pullback into the daily demand zone. So, and also we can also expect the daily internal to also to continue. So there are two contradicting thing that can happen. So what we do is we'll just focus on the lower time frames and then get the session direction and then look to enter the trade. As simple as that. So in the 4-hour chart, the 4-hour swing structure is bullish and the 4-hour internal is also bullish. But if you zoom in, you can see that the price has swept some buy side liquidity and it has chalk bearish. And this is the supply that is responsible for this stock bearish. So I can look for sells from this supply, and also this the price is reacting from nothing. There is no valid demand, though there can be valid demand zones in the lower time frames. But from the 4-hour perspective, we see that there is no valid demand zones. So let's not overanalyze and let's only get the information that is available in the current time frame. So here we see that there is no demand zone, so this is not a valid reaction. So we can expect the price to push down to take out this low. As simple as that. So for now, there are many reasons for the price to come down. Yeah, there is some equal lows right here, and price can come down to the discount prices. Also, there is the daily demand, which the price can come down. So there are many reasons. So even though the price had chalked bearish and the price had mitigated into the daily, the 4-hour supply, which is the only supply. If this supply is invalidated, then we are sure that the price will push up and take out this high. So this is a very valid supply to look for sells. Till then, even then, I'll not be looking for direct M15 entries. I'll be waiting for the H1 to chalk bearish, and then I'll be looking for sells. So that's the plan. You know the reason now, because in H1 the swing structure is bullish and the price has swept a strong sell side liquidity and then it has chalked bullish, which means that this is a valid demand zone from which we can look for buys. So this clearly indicates that the 4-hour internal structure can continue, which means that the 4-hour has chalk bullish just to make an internal pullback. So like that we can assume based on the H1 chart. Though there are many reasons for the price to come down, but still the current price action indicates that the price can push up. So that's what we are going to trade now. A sweep of sell side sorry, equal lows, sweep of sell side liquidity, chalk bullish, valid demand zone, and this demand zone has also got some inducements right here. So price can take this inducement and continue this internal structure. So valid valid a valid demand zone for looking for longs. But what I analyzed during the session, the high time frame suggests me to look for sales, but the H1 structure is totally against it. Price almost reached the discount and chalk bullish. Still, the price didn't reach discount. So that's the first risk factor. And chalk bullish respecting a demand zone. Price swept equal lows and chalk bullish, thus longs could be valid from this demand. I'll categorize this as lower end of medium probability trade, and I'll wait for a strong lower time frame confirmation before getting involved. Strong lower time frame confirmation doesn't mean H1 chalk bullish, which means that I need a strong M15 confirmation before getting involved. So did I get it? I got. That's why I got a losing trade. So I want to clear LC2X models or preferably an MC entry. So I have analyzed an mitigation entry, but I did not take mitigation entry. I took confirmation entry. So here we go. Price mitigated into the H1 demand zone, and there is a strong pause bullish in the I pause bullish in the M15. And once I got that I pause bullish, I placed the trade right here. A buy limit order targeting the equal lows, equal highs above, and the stop loss just below this one. So what I should have done is wait for the price to mitigate this demand zone, and then I should have placed a buy stop order. Well, that means that I would be placing my that stop loss just below, but the for invalidation of this trade, we must keep the stop loss just below right here. So when the price goes below, which means that there is invalidation of the trade. So there is positives and negatives for both confirmation entry and mitigation entry. I have not figured out when to use confirmation entry and when to use mitigation entry. So in future, I'll be objective, and I'll bring in rules for that. For now, I'll go with confirmation entry because in the past I have missed few uh, trades because of mitigation entry. Also, because of mitigation entry, my stop loss was larger, and before the price could reach my take profit, uh, the price would uh, sorry before reaching the 2.6 hour mark, the price would reach my take profit target, and it would reverse and hit my break even stop loss. So for those reasons, I just moved to confirmation entry. But again, the confirmation entry is proving wrong to me because I just got a losing trade. If this was a mitigation entry, then I would have escaped from a losing trade. Yeah, price actually confirmed this one, and then price pushed up, and there was an equal high above. So I thought, okay, this after the mitigation, price could take at least this equal high and continue pushing up. But there was a strong supply came into the market, and price took my stop loss. So you can argue that this could become a fake break, and then LC2X model. This could become a pullback inducement, but I was not bothered to trade this one because once I get an entry model in a POI and it fails, then I won't be taking another entry model in the same POI. So that's the rule that I am sticking with. I'm not interested in looking for LC2A, but rather I'll wait for H1 to shift bullish before getting involved. That's it. Here we go. At 1331, I got a clean confirmation entry, so it's just an update. This is the chalk bullish line. So if the price chalk bullish, then I can look for LC1s from the freshly formed demand zone. Then I can look for buys. But unfortunately, the price liquidated this low and this low. I'll, so it is an unfortunate event. So um, there was too much of sell side liquidity sweep. So that's why it was used as liquidity by the market, and the price went up. So here you can see that I have mentioned here also about uh, confirmation entry and mitigation entry problem. So yeah, let's figure out in the future. But for now, let's move on to the next day. July 1, I was absent. So let's just quickly look what happened on this day. Um, okay, we left here, right? Yeah, we left here. The price took out the sell side liquidity. and then it started to push up, and then there was a chalk bullish, and then the price steadily moved up, which means that there was yeah, a price actually mitigated the discount level. So once the price mitigated the discount level of this swing range, so we can expect the price to take out the swing high. This is the normal expectation, but for that we need some confirmation, and we got some confirmation like chalk bullish. So once the price chalk bullish, so there was a clear demand from which I could have looked for buys, and here we go. There is this small demand zone from which I can look for buys and target the swing high. Did I get a trade on this day? See, no, probably no. So yeah, there is LC2B, and this is the liquidation candle, but the liquidation candle is very large. It is around 23 pips, I guess. So I was 23 pips, and definitely I would not get any trades on this day. I mean, definitely I would not keep a buy stop order with this large liquidity candle. And yeah, eventually price um made boss bullish, and then it started to make the swing pullback. So will I be able to uh, play the swing pullback? No, because this would 1, 2, 3, 4, 5, 6, 7, 8. Yeah, this marks the end of the New York session. So after this, this is New York lull, so which I don't trade. So though I was absent, there is no trades on this day. Cool. So let's move on to July 2, Wednesday. So if you want any updates from the daily, there is no update. Still, the price swept the sell side liquidity, and still there is no structural confirmation yet. So still there is no structural confirmation. Still waiting for it. But for now, what I can say is, if the price chalks bearish, then there is no demand to the left. So price will obviously come down all the way down to this daily demand before pushing up. So that's the expectation. So I can refer to the lower time frames and see what will happen on this day. So this is the 4-hour chart. So we are having a clear internal boss bullish, and this is the demand zone that is holding the price. But we are having a failed reaction of this demand zone. So this is the first sign. I mean, a 33% chance that this demand would fail. But if you want more confirmation, then you must wait actually for the demand to fail. Or if you jump into the lower time frames, if you see any low resistance liquidity in this demand zone, then this demand might fail. But for me, this demand seems valid because it swept sell side liquidity. So, but yeah, price is still in the premium prices, still in the premium, so it must come down to the discount. So probably this uh, low can be taken out, and the internal structure might shift bearish to mitigate into the discount prices. And yeah, since two things can happen at this point of view, I'm not looking for buys directly from this H1/H4 POI. So I'll be waiting for the price to chalk bullish to look for longs, and the target would be, this would be kind of an internal pullback. Since there is no demand, no supplies to the left, I'll be targeting this demand zone. If the price flips this supply, then I will be looking for sells from this flip zone, targeting the discount prices. And also there is some equal lows which we discussed on the first day. I'll also be targeting the equal lows from the flip zone. And yeah, actually the price flipped the demand, but there is no pullback to enter, and the price started to rally down, and it eventually took out the sell side, I mean the low resistance liquidity below. Still the price didn't reach the daily demand zone, so still there is some scope for the price to push down. But yeah, this is a tremendous amount of liquidity that has been taken out. So price also took the liquidity. Okay, it has formed an equal lows right here, which I just noted it down. So this could be an inducement for the daily demand zone. So probably price can react off from this supply. If I get any chalk bearish from here, then I'll be looking for sells directly, and then probably I can aim for this low as the first TP, and this as my second TP. So let's see if that happened in this week, or will that be happening on the next week. Okay, that is the end of the session. So let's move on to July 3, 2025, and it's Thursday. So here we have a strong push down in the daily. It's something that we must talk about, and the price has reached the discount prices. So, well, though the price had reached the discount prices, price is still not mitigated into the demand zone. So, there are two possibilities. Since the price has reached the discount, the price can be bullish and then take out the high, or the price can be bearish and continue to be bearish till the price reaches the demand zone. For now, what I can say is price since the price had chalked bearish, and with this high probability supply which swept liquidity, price can mitigate this supply, and this supply can hold and push the price further down to mitigate into the demand. So there are multiple reasons for the price to move down. Than there are more reasons for the price to move down than for the price to move up. So I'll be sticking with the bearish bias today. So it's not from the daily. If I get bearish bias, I'll be looking only for sells. If the H1 suggests an alternate, then I'll also be looking for buys. So it's all about trading this session direction, not predicting the overall price action. What will happen in the next few months? It's about predicting what will happen in the current session. So here we go. Here you can see that the 4-hour has boss bullish, internal boss bullish, and it has internally boss bearish, and it has made it has also took the sell side liquidity. So it has also reached the discount prices. So, but still there is this demand that is still yet to be taken. So what I can do is I can zoom in into the lower time frames like H1 and wait for a structural confirmation like a bearish sweep zone or a bullish sweep zone. Depending on that, I can look for buys or sells. So here we go. Here, if you see that the price in the H1 is swing structure is bearish, and we can expect the price to be bullish to mitigate into the demand, this supply zone, and also reach the premium prices. But if you see that the market, if you follow strictly the market structure, then you will not be able to capitalize on this bullish move because there is no chalk bullish. If you zoom in into this internal structure and study this piece of price action, then you will notice that here you can see that there is some equal lows which the price swept and it is moving up. So if the price chalks bullish, then this would be a valid demand for me to look for buys and target the supply above. It's as simple as that. But yeah, sometimes it does not happen, but most of the time it happens. So I think that there was fundamental event that fundamental news. So price swap liquidity chalk bullish. So eventually the price should have mitigated this demand zone and pushed the price up, but rather it swept all the sell side liquidity and you know mitigated this demand. This is not an actually demand because it did not cause any market structure shift, but still it is an order block here in the sense that most of the orders came here and the demand took control. So lot of pending orders were there and price took out this order block and then strong bullish reaction, and the price started to consolidate. What we can infer is price made some equal highs above below this inducement, which means that this below this supply, which means this supply has now become much more high probability with the added inducement below. So that's the end of the session. So let's move on to July 4, 2025. Here you can see that we are seeing multiple rejections. At the same time, we can also see a low resistance liquidity being built up. So we can strongly expect once the price mitigates this supply, we can expect a strong bearish reaction onto this to take out all the low resistance liquidity and eventually mitigate into the daily demand zone. Here it is clearly visible in the 4-hour chart, the low resistance liquidity. So we are expecting the price to mitigate the 4-hour supply, and we will expect some price action in the, and we are keen to I was keen to study what will happen on that POI. So here we go. The internal structure is bullish in the H1 chart, and you can clearly see that the price has swept liquidity and it has pushed up. So I can expect this tiny demands to hold the price, or probably this demand is already mitigated. So this is the demand. This is the only demand that has not yet been mitigated. So you can expect this demand to hold the price and push the price up so that the price can reach the 4-hour/daily supply zone. bullish till the price reaches the supply above, and once the price reaches the supply up, buys become low probability once the price reaches the supply, and I can wait for the price to chalk bearish and look for sells. So that's simple. So at the end of the day, this demand got invalidated. I did not get any valid entry models right here. But eventually the price actually chalked bearish. So looking for sells from here is valid if you want to take it. But I was not super interested because the internal structure is still bullish, and there are a lot of reasons for the price to push up. But yeah, we can expect the price to come down and take out the sell side liquidity, and eventually uh, this could be the higher lower high, and this could be the next swing high, and the price can push down. But even then, the price did not mitigate the valid supply that I marked, which has inducement and which has flipped this demand zone. So anyway, no trades on this day. Probably if the price mitigates this supply, then I can look for a strong M15 confirmation and look to trade. This I took on. Yeah, this is the M15 chart. So why I didn't get any trades on this for this longs? For this longs, why I didn't get any entry models? Here we go. This is a lid price. This lid has been taken out and it's been used. And again, this lid has been taken and it's been used, but the price still did not mitigate the demand zone. So there are two conditions: price must take the lid and it must mitigate the demand zone. Only then I can look for. Only then I can look to get involved. So here we go. The price took out the lid and mitigated the demand zone, but this is a strong. Even if I place my buy stops order here, the next candle invalidates the LC candle, and again this is the next lid that has been taken by this one. So if I placed my buy stop order right here, but price did not tag me in and eventually took out the sell stop. I mean, eventually invalidated the POI. So yeah, that's the reason that there is no trades on this day, even though the analysis was clear and simple. So yeah, that's it from the GU. So we'll see what happened on XAU in a couple of minutes. Let's start with XAU. So in XAU, I didn't get any trades, and I already mentioned that I was absent on July 1. So yeah, let's jump into the whiteboard and see why I didn't get any trades on this week on XAU, and also analyze any possibilities of trader trades. One thing that I forgot to tell you about GU. Yeah, sorry. There was actually one trading opportunity in XAU which happened on Friday, but I did not take it. So I'll also tell you like why I didn't take it on the first place, and I also placed a limit order, that is the confirmation entry order, but I was not tagged in. But it is good that I was not tagged in. We can also discuss that in depth when I am discussing about July 4. So yeah, let's jump into June 30 and analyze the daily chart. So here we go, June 30 daily chart in XAU. So here you can see that the daily as internally was bearish and it has mitigated into the demand zone. So now we can expect the price to push up at least to mitigate this supply. So now two things can happen in the supply: either it can respect the supply and continue the bearish internal structure, or price can flip this supply and then push further up to take out the daily swing high. So two things can happen, but what can happen immediately for now is price moving up. So we are having a clear bullish bias in the daily structure. From the daily structure, from the 4-hour perspective, also we are having a clear structure that price mitigated the daily demand zone, and the price a strong rejection from here, and the price chalk bullish, and there is no opposing supply. So I can look for buys from here and then play the complex pullback till the price reaches this supply order flow. So yeah, still we are having from the daily perspective, this is inducement. So we can look for, this could be the first target, and this could be we will definitely get a valid reaction from this one. But again, the demand could power that, and it could eventually push up to mitigate into the daily supply. So let's not over analyze, let's keep it simple and for now, what we know is price mitigate this demand zone and it can push up, and this is our target. That's it. Let's keep it as simple. Here we go. From the H1 perspective, we are playing the phase C longs. Here we go. Price swept some sell side liquidity, internally was bullish, and here is an inducement. If the price mitigates this demand zone, then I can look for M15 entries directly. I prefer M15 entries for now. But the conservative approach is that, if the price mitigates this H1 demand zone, which means that it is actually a chalk bearish. So which means that we are trading against the fractal structure, which is not ideal. But since we are having multiple high time frame confluences, I am okay to trade against the fractal structure, but only if I get a strong M15 confirmation like the LC2X model or the M15 confirmation entry. So the price came down, took out the inducement, but it did not mitigate the demand zone. So I waited for it. Once the price took out the liquidity below, it gave a reaction, but it did not come to mitigate this one and push the price up. So nothing happened. So no trades on this day. It was very clear what's going to happen, but nothing happened. So the actual reaction took place on the next day, but there was no way to enter. Here you can see that the price swept sell side liquidity, took out this low. This was our POI. But unfortunately, we did not get any trades on this day, and even on the next day, that is on July 1, which was absent. There was one straight push up. There is no pullbacks. So if I had in this desk, what I would have done is I would have waited for this inducement to be taken out and price to mitigate this demand zone and then push the price up. But there is no pullbacks as such. Price just pushed in one straight push. So July 1 is a null day. July 2, I was present on this day. Same. Here we are having additional confirmation for looking for buys. Here you can say that the daily as stock bullish, and this is the demand that is currently holding the price. Then I can look for buys from this demand zone. But the caveat is price has now reached the premium prices of the internal structure, and it has mitigated into this daily supply. I mean daily flip zone, which actually flipped this demand zone. So there is a lot of chance that this could be a buy sell liquidity sweep and the price can push down to take this low. So since two things can happen, what I would obviously do is wait for the price to show its intention in the lower time frames and then trade with the direction. As simple as that. So yeah, here you can see that the 4-hour as internally was bullish. So once the 4-hour internal was bullish, then I can look for sells targeting the daily demand zone. But we can also expect the small internal structure to continue till the price mitigates the 4-hour supply, and then we can expect a strong bearish push down, and then the price can mitigate the daily demand zone. So both longs and sells are valid. So what we will do, wait for H1 confirmation before looking into this, before getting involved. The swing pullback objective might be completed. So yeah, the swing pullback objective might be completed, and the price as the price has reached the premium prices, but it is not reacting off from any valid supply zones. Also, there is valid supply above having inducements, and the price can be magnetized towards its supply. We can also expect an internal pullback as the 4-hour just I was bullish. Since there is no valid demand, we can expect the price to mitigate the daily demand below. So we are expecting both the price to move up and the price to move up down. So let's jump into H1 and start out this problem. Here we go. Here, if you see, the swing structure is bullish in the H1, and this after the pullback, we can say that the price has swept sell side liquidity. If the price chalks bullish, which is already there, if the price chalks bullish, then this now becomes a valid valid demand, which flipped this supply, and I can look for sells from here targeting the supply above. So this is how I get the overall view of the high time frames and judge in which way that the price is going to go using the lower time frames, not lower time frames, using the session price action. and there could have been a trade, but there was no entry models. It did not play out. I'll tell you why. This is the demand zone that I was talking about. Uh, price here was an LC1 price came down, but it did not touch the demand zone, so I did not look for sells. But the next candle touched the demand zone and pushed straight up, so this is not an ideal LC1 that I will be taking up. So I just waited for I just marked this as a fake break because probably this was the news candle, and definitely if there is a strong push during the news, definitely the opposite side would be taken out. This was definitely an pullback inducement. I waited till the end of the day for this low to be taken out, but eventually this low was taken at, you know this is M15, right? M15. This low was taken at 13:15. Sorry, 3:15 p.m. So this actually happened at 3. Even this I was not able to take because the next candle invalidated the low. So I was supposed to keep the trade here, but as per the rules, I was not supposed to take trades during the New York lull period, which I obeyed it, and I did not get involved in this trade. So I just missed a beautiful winner. Sorry, not me. My strategist just missed a beautiful winner. It is what it is. So um, yeah, price mitigated this demand and pushed up. So this now becomes a valid internal structure. Or I can also mark this as a swing structure because it is a strong low as it swept sell side liquidity and pushed up. So this now I can mark this as a strong low. Okay, not a kind of zoom that I was expecting. Okay, now let's move on to July 3, 2025. Here we are seeing that there is a strong shift in the fractal structure. So now we are confirmed that the price is going to move up for this week. So probably this supply can be taken out and the price can continue pushing up. So that is the expectation, but expectation never always becomes reality. We must confirm it with the lower time frames. So here we go. In the 4-hour chart, we can see that the internal has made a strong small pullback and made another internal pullback. But still, this supply is not yet mitigated, so we still have room for the price to push up to mitigate into the supply. But before that, if I get a bearish chalk bearish, I would not be hesitating to look for sells from the freshly formed supply. So from the H1 perspective, there is no way to look for trades, look for buys or sells unless and until it mitigates this supply and chalk bearish, or it chalks bearish right away. So looking for buys is not valid because there is no price is not reacting off from any valid demand zone, though it is reacting, but I still need some sweep zones like this to look for buys and a small liquidity candle so that I get sufficient risk to reward. So instead of that, I'll just wait for the price to mitigate the supply chalk bearish and then look for sells. If the price is going to continue moving up, then I'll wait for the price to flip this supply. So then I will be having a clear direction in which the price is going to move down. I can mark this flip zone and I can look to trade from that flip zone. So what happened during the session? Price formed a kind of low resistance liquidity up here and it has chalk bearish. So as I said, if the price chalk bearish before mitigating the supply, then I would be looking for sells. This is the flip zone that flipped. This is not actually a demand zone. This is the demand zone. So price actually, this is entirely the flip zone. So from year to year, so within that flip zone, if I want to mark the pivot zone, that this would be my pivot zone. So price flipped this one. I expected the price to mitigate this supply before pushing down, but that was a massive push down and the price started to consolidate during the session. So that's the end of the day. If tomorrow I get a mitigation into this supply, I would not be hesitating to look for sells directly using M15. So July 4, the last day, the price is still in the same area of value in the daily. It still hasn't mitigated the daily demand zone. So let's move on to the 4-hour chart. Here you can see that there is low resistance liquidity above and there is demand below. So there the price can push up or it can push down. Either ways, the internal structure is still bearish, and this is a valid supply from which the price can react and push the price down. So there are two things can happen at this point of time. So it is better to look for the H1 and then look for sells. I mean, look to get involved. From the H1 perspective, we can see that there is buy sell liquidity above as well as below. So this is the POI that is currently holding the price. So yesterday I told you that I would be looking for sells directly from this POI if the price mitigates this supply using M15, but I changed my mind on this day because there was buy sell liquidity above as well. So price might invalidate this supply to mitigate that buy sell liquidity and then push down. So it's better that I wait for more confirmation before getting involved. And yes, I got my confirmation. This is the price mitigated this supply. And if I zoom in into the M15, price actually made a strong bearish push down. So here, this is the H1 supply, and here is the lid. So I could have taken a valid LC1 from here, stop loss just above, and then it would have been a kind of a break even trade. Break even trade, like price would have moved. My stop loss, I mean my take profit would be right here, and I'll show you what that happened. Yeah, I think I did not. Anyway, okay, this was a valid LC1, so lid a valid LC1 from which I could have looked for sells, but I just waited for additional confirmation. So price M15 confirmation, and then once there is M15, sorry, this is not M15 confirmation. This is M15 confirmation. Once there is confirmation, so this was the flip zone that I was looking to target. So if the price mitigates this flip zone, then I'm happy to look for sells, and I have marked my entry right on the edge of this flip zone and stop loss just above, and it's just set and forget order. But the price never tagged me in. So I missed this tag by just few micro pips, or you can also say piplets. And anyway, the price started to consolidate, so it was not a valid uh, movement that I was expecting with the price. But if I had taken the LC1, I'll just show you what would have been the result if I had taken the LC1. Okay, I was using the wrong. This is the lid, and if I had taken the LC1, assume 325, which means 3685, and this would have been my target 2.6. I would have also kept some stop loss, I mean a displacement buffer, definitely. So this would have been my take profit, and eventually I would have not hit the take profit. But still, it is an break even trade. I would have kept my what that trailing stop loss right here, because this would add up to the swap charges, and the swap charges are the charges that would be uh, charged by the broker for holding your position in the weekend, and there would be uh, overnight charges. So I don't want these charges, so mostly I would cancel this trade, and I would get roughly I would getting sorry if I had canceled this trade, then I would have got uh, probably would have canceled it here 1.6. Still, it's a valid trade 1.5 hour, so that would have nullified one of the losses and provided me an additional 0.5 hour profit. Yeah, you can tell this as a missed trade, but uh, okay, I just need to be more focused on the desk, and you can say that fear of losing has kicked in, but yeah, I don't think it kicked in, but still, you can, even if I don't agree with you, uh, it's still the fear of losing. Anyway, that is the um, session, and there is no trades on this day as well. So yeah, overall we just got one losing trade, and we missed one trade in XAUSD, and I must admit it. It's so yeah. Probably let's see you next week. Probably we must get some profits. We must get some trades, and those trades should end up in profits as per the random distribution. So let's. There is no expectation, but if it happens, it's perfectly fine for me. Yeah, that's it from on this day. I mean, on this week. See you on the next week. Until then, cheers, guys. Bye.